Inflation is often described as the rate at which the general level of prices for goods and services is rising, and subsequently, the purchasing power of currency is falling. America's first taste of hyperinflation came during the Revolutionary War, as excessive printing of continental currency led to its rapid devaluation, causing widespread economic hardship. For much of the 19th and early 20th centuries, the U.S. adhered to the gold standard, tying the dollar's value to gold and providing a natural restraint on inflation. World War I brought significant demand in government spending, leading to notable price spikes in inflationary pressures as the economy geared for conflict. Conversely, the Great Depression saw severe deflation, a prolonged period of falling prices and wages, which exacerbated economic decline and job losses. Post-World War II, America experienced an economic boom. Initial concerns over inflation led to government price controls to stabilize the rapidly growing economy. The 1970s brought the unique challenge of stagflation. High inflation combined with slow economic growth and high unemployment, baffling economists and policymakers. Federal Reserve Chairman Paul Volcker aggressively raised interest rates in the late 1970s and early 1980s, successfully bringing down runaway inflation at a significant cost. Following Volcker's actions, the U.S. entered the Great Moderation, a period of relatively low inflation and stable economic growth that lasted for decades. The 2008 financial crisis saw unprecedented intervention, with the Federal Reserve implementing quantitative easing to stimulate the economy, largely avoiding inflation at the time. The COVID-19 pandemic severely disrupted global supply chains, leading to shortages of goods and increased prices as demand outstripped available supply. Simultaneously, massive government stimulus packages and increased spending injected vast amounts of money into the economy, further fueling inflationary pressures. The recent surge in inflation stems from a confluence of factors: supply chain issues, robust consumer demand, increased government spending, and rising energy costs. For everyday Americans, inflation means that their hard-earned money simply doesn't go as far, making essentials like groceries, gas, and housing more expensive. In response, the Federal Reserve has aggressively raised interest rates, aiming to cool down the economy and bring inflation back down to its target levels. The future of inflation remains a key concern. Policymakers are navigating complex global dynamics while striving to achieve a stable and prosperous economic future. Understanding America's historical battles with inflation and deflation is crucial for comprehending our current economic landscape and preparing for tomorrow's challenges.